There it is. There it is. The Dow Jones Industrial Average, the nightly news, on a one-way path to 34,000. Doesn't look natural. Doesn't even look like it's supposed to be there. But there it is. That's some pretty insane price action coming out of little old value. Little old me, says value. This terrible price action in here, nothing, 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 nothing. Pulling the trigger, and this is the start, and this is where most people not even in here. I took the morning off. Most people take the day off so far. We got confirmation of the long-term idea very strongly, even in pre-market action. Yesterday, again, we had this sort of test of the idea, sort of where we are. And with the candle today, it's exactly what I talked about yesterday. If we get this candle that we have today, it would confirm everything we've been talking about, and you can just basically go to bed for the next few months. You could basically sleep through all of earnings. If you're in long-term positions, you don't have to do a damn thing. And that's where being exposed to everything and capturing everything, that's the best possible position to be in. And by not over trading, this is where when we come out of this low, and then I'm repeating a lot of everything, but when we come out of this low, we don't have the information to make a decision. So what we do is we take these short-term swing plays that offer a lot of percent up front so that we can then make decisions in the moment based on every single candle we see. That then turned into, okay, this path that we're on and the way in which the market is trading, we understand that all equities are risk on and everything's pushing. And so we shift our focus from capturing now to capturing what comes later. So by being in long-term positions, we can hold through basically everything, push through any pullbacks and any sort of things that may happen day to day and sector to sector, indice to indice. It just changes, right? And so yesterday was a good example where the best position you could be in was being in a long position from anywhere in here and pushing through yesterday to continue today. Because again, you cannot perfectly time this sort of interaction here. You cannot perfectly time a pullback from today. If you look at just from the cues here, this is why I mean you need to be in a long-term position and just push and just fucking and literally just take a time off. I mean, you're still watching and obviously I'm still involved, but the reality is here is that you're not perfectly timing this. It's not happening. So just pushing through this position is 100 times better than having this pull back down yesterday, having to take profit up here. You're never taking profit up here perfectly. It makes zero sense. And you're never done buying at the last second of close perfectly to capture the gap up this morning. It's never going to happen, and you'll lose money trying to overtrade. And so again, that's why we've changed our focus of trading, which is to be on a larger, a lengthier time horizon, and it shows itself immediately. And that's what the best thing about being able to adapt on the fly and solve problems as they come is that you get rewarded very quickly and you get confirmation of it very quickly. Just like if you buy an option and it's not going up, then you get the hell out of your option because it doesn't make sense. Because if it's not going up when you buy it and you're not getting speed or direction, then there's no point of being in it, is there? And so the same sort of problem solving that we just went through over the last, I would say over the last week, we were solving problems from back here. Those paid off, and then being able to not go, oh, this is easy. A lot of what the market will do and what people will do is they'll go, oh, this is easy. The market's going up. All I have to do is just buy, right? But think about where that also comes from. Usually that idea, they're not capturing this very start of the move. And then when the market is going up here, then okay, now it's very easy, right? Now it's very easy. Now I can get into trades. But then what's happening is that they'll have a day like this here, like yesterday, where they'll sell, and now all of a sudden the world is upside down to them. There's not an up or down, and there's not a direction. And now something went from easy to being, well, now it could be coming down here. And who knows? This is where not using that mentality and using this fresh focus and we're not looking at every candle in this sort of, okay, we need to make decisions on day to day, understanding that it's not day to day right now, understanding it's probably more week to week, and taking this candle in stride. And you get it today. Today's price action, continuing with earnings, with bank earnings, and seeing the way in which the market is able to continue to push money into equities is such a big concept here, because the problem that starts to arise always as you go through all-time highs, you have no resistance, but your demand, at some point we don't have enough money to buy anymore, right? But this is where this earnings from banks coming in of how much cash they have, how much cash they can throw into the market, and then how that actually pays for everyone else to continue to do spending. And I talked about that a little bit yesterday. As these numbers come in, economic numbers, they're jumping a significant amount. There is just a behavioral, there's a psychological thing in all of us where if the market's going up and you have a pension, right, you're looking at your 401k and it's going up, you will go spend money. That money's on paper for you and you can't spend it, but you'll go spend your own money in your own bank account because the market's going up. Those sort of things that we see in the economic numbers, that continues to go. With inflation coming, and that's going to help out with those numbers, what's happening is that it's not so much that we need new money to continue the price action here. That's where this weird understanding comes in. You don't so much need money to continue to come in at the same rate. It can actually slow down in terms of a rate, and price can still increase. Think about supply and demand and how it sets price, right? If there's no supply up here, right, and there's just significantly more demand, price will rise very quickly. Even if demand comes off, if there's no supply, price will continue to increase, which is where a lot of this bet comes from, where, again, you're just going to continue to trend through, and it shouldn't really end here unless there's a big difference. Something changes, right? Something really big changes in the market where these things happen. But really, on a technical level of supply and demand, it's not so much that you and I need more money to spend, right? Yeah, when we take profit, that taking profit is selling in the market, but that does not equal the same as where the price is. Where if you take profit and it comes down a certain percent, the money that you put back in is actually more money than you spent the last time. And even though the price is at a higher point, your demand that you're going to put into the market and set for a price is actually larger even than the supply and demand from before, which is going to cause price to continue to trend. So it's not that it needs more money to continue to push up. We don't need more of a flow. We'll continue to get a flow, but you don't technically need a larger flow than the last time. It's not like $5 that was put in a year ago will no longer push the same of $5 today because of inflation. It's actually not, that's not where we are in terms of a market. We're actually able to push price consistently here by just not freaking out and by not trying to trade every single moment, by just being in this trend. That's what's happening here. And that's what banks do, and what investors do, is that if they're able to get these long positions, which is what we're trying to be able to push through here, and everyone's really doing it, and you can feel it and see it, and see how this is, if we all just keep our hands off the wheel and let things continue to run here, we can keep riding it together. And that's where the market gets into the situation of playing chicken, right? We're certainly playing chicken with each other, where if none of us do anything, then price will continue to climb up without us even putting more in. You and I, none of us have to take profit and put more money in or anything like that. There's not, someone doesn't need to lose for us to win. We already understand that market makers will provide the liquidity, and they even make money off the spread. So even the one providing liquidity selling, there's no one selling long positions in the market. It's only market makers selling, and they're buying an equal amount as well, right? So they're selling for a fee to allow us to actually buy something, but there's only so much of that. And again, if we continue to buy at a consistent rate through that, the market will continue to trend, and that's where we're at. And I think today, again, we're not looking so much candle to candle, but it's definitely today's candle in the way the price action changed from yesterday, and how there's some things that, again, can just sort of happen where you sell everything one day and then buy it all again tomorrow. That sort of thing, it should be able to be just a blip and not matter. Tomorrow, none of this will matter because we're back on a trend, right? Basically, at the end of today, none of this mattered. And so that's where is once you get to this point, and as soon as you get to the point where it no longer matters what happens on this candle or this candle, it just happens where if we're continuing the trend or not, and if you can answer that at the end of every week, then the portfolio that you set up for a long-term trade is going to do well. And those that are trying to force things every day are not going to do well. There's opportunities, but the timing gets worse because we're no longer all trading like that. The only time that sort of trading works is if there's people to take advantage of, and there's market moves and swinging back and forth to take advantage of. If the market's not swinging back and forth, we can't. How are we buying on support up here? Where's our timing to buy on a pullback? Where's our timing to buy out of a consolidation? Is there anywhere in the last 2.5 weeks that you could do that? There is nowhere. And so that's why we're in a long-term position. We're pushing that shit, and we're going to make a lot of money from it. That's if, again, things continue. Things don't need to always continue, but we definitely have been able to remove some of the stress and anxiety of sitting here all day watching price. And that's already in of itself a success, I would say. And to be able to not have to do that, that's already to me where today I look and I saw the pre-market action and I go, okay, that candle yesterday didn't mean anything. And we have the long-term trade, and it's actually, it's certainly on. And I see more of the earnings and see how, like even Bank of America did today. And I'll look at banks, but it's certainly on. And again, it's people are going to do the, oh, this is easy part. But again, it's always easy when someone else is doing it, right? It's always easy when someone else is doing it. It's not easy, but being in a long-term position certainly makes it easier than trying to trade through everything, right? You're not going to be able to trade day to day. It's just not possible right now, right? Banks. So banks, again, have been the biggest earnings to start the season. We had JP Morgan, Goldman with some great numbers. Bank of America had great numbers today as well. Again, earnings will cause different price action. This is, again, where understand how we're looking at the market right now, so you can look through some of the bullshit and understand some of the move. Look at where price is here on just XLF as the average. It's as soon as you start to look at this, you'll realize this one candle doesn't matter here, does it? It doesn't matter. And so if you're in a long-term position to push through here, this here day to day does not matter. All that matters, though, are the numbers and the vibe that comes through, and you go, okay, this is actually pretty damn good, isn't it? And so this is where you can start to look at this and say, realistically, this trend should continue up until the next earnings, right? There's even that factor comes in of, okay, this is, if the market continues to trend, then the banks will continue to trend. There is no reason, because banks have the buyback factor. They have the buyback factor. There is a dividend factor where there's always going to be institutions involved with banks holding those positions, and we'll get to the Dow in a second. These are going to continue to trend. And so this is where you're getting another confirmation today where I don't have to look at this. I can let this pull back like this here. This situation here, though, was different, because when we were trading from here, we were still in a fragile spot, and we just started trading value and trading through the Dow. And so when this started to pull back here, we had to take profit. We pulled the trigger again. This time would be different. This time would be different if you have a pullback like this, because we are in a different market state, right? We are in a completely different market state, and that's going to have a very different effect in terms of the timing and how long you can hold through things. So if you have the right options, again, you can hold through a week of sideways trading or losing a few percent. You want to do that because the timing, again, this time of buying off a low is going to suck, because, again, where the money is right now, it's going to suck, and you just have to realize that already before and give yourself a little bit more. Think about how tight we were over here, even just a month ago, how really tight we were in terms of getting in and out of positions, like sensitivity wise, right? On the sell side, we were very sensitive to every time the market would pull back, because opportunity cost, we needed to be in positions that are going to be running and giving us points, because, again, we were basically value over growth at that point. Now it's just equities over everything else right now. So again, now it's sort of a buy everything, and it's pretty obvious what you should or should not be in, right? So let's look at the Dow real quick in terms of this price action. And so again, Dow is at 34,000, unbelievable price action, and probably one of my in terms of an idea, a big macro idea, probably one of my favorite ideas I've had in terms of maybe a timing or just even getting points in general. A trade like this here uh, is in a month of price action to get the Dow to go 11.5% is really silly. It's probably really silly because again, that doesn't happen. It actually doesn't happen basically ever. And so getting the timing here was very much just timing the idea of value, right? And that's what the idea was. And it's a speculation of what we have right now. And that's the hard part of some trades are going to be based on the moment, and some trades are based on what's going to happen at this point. I want you to think about what's happening right now in the market and where what you see and what you feel, oh, everything's bullish and it's easy, right? So that understanding of where we are right now is going to change how things are being traded for future trading, right? So now go back a month. If you go back a month, we were in a very fragile state. So now in hindsight, what you can do is go, okay, the trading that started from here was betting on what we feel right now, right? Well, that's exactly why we were doing this in the first place. We weren't doing it for what was happening then. Nothing was happening then. Prices were getting pushed up, right? But this is not why we took the trade. The trade we took over here for the Dow play was because of what would be happening over here. A month later, what would be the feel? What would be happening? And so again, this is where you got to understand on the big idea thing like we're doing right now of putting long-term trades. It's not so much on what we feel right now. It's about what the market's going to be doing a month from now. And that's where we're making a decision right now for what's going to happen a month. That's just that's the reality. Even when we make a trade that's on support and it's just looking to be a swing up to resistance, that's still the decision you're making. And so this sort of trade from here is just really the start, because now again you just got confirmation of banks and everything. This is where this play really starts to pick up, and like I've said, 2022 is really when we get next confirmation for inflation. So realistically, and again I'm saying realistically as in this is what the most probable situation would be, is that this would continue to trend until 2022. It's kind of a weird thing to hear and a weird thing to say, but that's kind of where we are again, because there's not another factor that can shift this. There's not. We've already seen the numbers. It doesn't matter what growth gets for earnings, because again, no one cares about how many iPhones Apple sold. Nobody cares. We care about the bank numbers. No one cares how many iPhones Apple sold. Apple will come out with something. They can always get themselves out of a bad situation. Amazon, does anyone actually understand Amazon's numbers? They just realize that Amazon is literally everything. They own everything and do everything. Facebook, do we need numbers? Don't people hate Facebook? No one really wants to use Facebook, right? We understand that those things don't really matter right now, right? There's been times when, when we basically have nothing else to care about, and we'll care about these type of things. But there should be an understanding here of what's happening and how, when you think about what people are doing and how the economy is going here, again, you can have everyone now all of a sudden, everyone wants to say it, right? Everyone wants to say it all of a sudden that, oh, yeah, well, now the market's bullish and easy, and oh, now the economy's picking up. Again, we've really already traded for that idea, right? We've already been trading for that idea, and that's why we're now saying, okay, this should basically, with everyone else now thinking this, should be able to continue. The anxiety in the market is turning to a FOMO. And the FOMO, as long as the FOMO is under control, because again, that would be our volatility in the market right now, is basically fear of missing out. As long as that fear of missing out factor doesn't cause too much volatility in the upside move, because again, if from this move here, this is something I'm going to be watching for actively. If from this move here, if it doesn't go on this trend here, which is the usual velocity, and what we're expecting is the market's expecting a velocity of just the average amount, right? This degree of an angle here. FOMO can cause the market to do this from the average and starts to come up this way, right? And that's what we've been on here. FOMO, if it continues to rally and sharpen the move, that is going to cause pullbacks to happen within the trend. And those are the things we're going to have to hold through, but it does get more difficult if it's increasing volatility because of the fear of missing out. That's one thing we'll look for. That can happen based on what we see people doing. It's what is their degree that they can affect the market, though. Because again, we're at a point where there's only so much liquidity, anyways, with everything being so bullish. This is going to be one of those questions of it's likely that anyone that has a fear of missing out, and this is where some of the probability of just continuing to trend will come in, is that anyone that is having FOMO, they're not going to be buying things that are at the very top of the high here. You know what they're going to be buying are those things that are not doing as well, and they're at a bit of a lower part. So when we look at things like, again, the clean energy side, this should keep selling, right? Well, think about what we're trading in right now, right? And again, why we're not in these positions anymore. We tried to make them work, but we've shifted our focus. Why is this continuing to come down? Things on like clean energy side, because we are trading on things that are getting economic numbers now. These are not growth. These are growth things that are happening in a future that we do not understand yet. We understand the inflation and the economic numbers are for things that exist right now. And so that's why value is doing so well, right? And has been doing very well. And why we've seen that move is because those already exist. They're already a part of something. They don't need to grow. What's happening with the numbers now is that they're going to cause those value companies to grow just by the numbers alone, right? Value, they never grow. Quarter to quarter, they never grow. They stay the same. But with what's happening in the market now, in the economy, with the Fed, with fiscal stimulus, everything, it'll cause those value companies to grow. That means these growth companies here, it's not the same, right? It's not the same. And so this is where when we talk about these kind of trades here, these will still be short-term trades when they come in, when we buy them on support. When you think about some of the things that are happening here, again, look at this. This is back and forth. ICLN, we want to get involved a couple times, and then it never worked. This is not a trade that we can take for a long term. These are going to be trades that still require a swinging back and forth sort of mentality to capture a move, but they're just not as good right now. I don't want my money in these areas. It's not something that I want to spend my time on. If I can get exposure to the entire market through the S&P, the Dow, the NASDAQ, then I'm going to do so, right? Why would, again, if you have the option to put money in and gain a percent over 3 months, and then instead you could slave away every day and trying to get that percent over every week with things that are not bullish right now, you're not going to do that. You're going to just choose the thing that you can just sit on and not have to do anything. And that's obvious, right? And it's more obvious. These positions that didn't do well, again today, it should be obvious, right? We talked about space over here, and I talked about as soon as this happened, I'm done, right? And that's what we talked about. You don't go, oh, well, now it's trading sideways. This is where something like this, you understand immediately, right? You understand immediately that we're not going to do it. And it keeps coming down. It's not just that we understand it. We're looking at the price and market. The market on opportunity cost alone has no reason to be involved here if they can go put the money in what we have in now quotations, easy, right? Easy trades. You'll go put it in the easy trade, right? That's all this is. So this is where it should be very obvious. You should not be going and taking chances. And that's where the whole long-term idea comes in, right? You should not be going in and taking a chance here. Yes, we like this apps play right here a lot. And guess what? Things happen very quickly that it changes, right? And so again, can you take a long-term trade right here? In a few months, it'll probably be up. Sure. But are we going to get exposure there to be able to make money over that entire time like you would in the market itself right now? No, it's going to require multiple trades. It's going to require a lot of trades. That's not what we're looking for, right? And so it should be very clear when you look at some of the price action where you should be involved or not. If you haven't already made the decision, then that makes things a little bit more, I guess a little bit more difficult. We've been sort of on the same trend for a few weeks now. I'd have to imagine everyone's sort of already positioned anyway, but if you're making decisions now, it should be very obvious, right? If you even simplified it down to a chimp understanding of if it's green, then buy it. If it's red, then sell it. You're going to do well. You just need to lengthen that expiration, lengthen your time, and be willing to hold through that, right? Because again, your points, the thing to remember here is that if you do lengthen and you go further out, your points are going to come all at once. It's going to be more periodic, right? From week to week, that will start to build. and develop, understanding that your exponential requires more time. Your exponential is not going to kick in for some time. If you have a I've always talked about 3 month are really the sweet spot, and we've only really recently started getting very short term in some trades. You're talking about your 3 month there. Your first month, you're not getting much of an exponential. You're more 1-to-1 there. Sometimes, but depending on the strike price, and where you bought it, it's going to differ. But you're really talking about a month before you really get into an exponential, where you get into the deep part of that curve that you're going to get points. And so you're going to have to hold it through there. I mean, again, unless price really took off, but you're not betting on it to take off quickly. Otherwise, you'd have short term. And so from this point here, it's going to require a lot of patience, right? It's going to require a lot of patience. And this is where not trying to eat everything that's getting, murdered. Anything that's getting like murdered right now on price, you can't go, oh, that's an opportunity. Sometimes that's the truth. Yeah. Sometimes when things get really blown up, that's the truth. And we want to go buy those. Like, we had some travel things over the last couple months that, oh, these things are getting beat up. Let's go buy it. Like that's an opportunity, right? We're not there right now, right? And so again, we're not there right now. And so, you look at something, think about this healthcare play, because again, this is my tier 2. Think about the healthcare play here. Imagine you just sat here, you didn't do anything else. This is the slowest moving damn thing in the world, is to buy these value plays. And you don't have to do anything. You just get into your long position, you hang out. Today, I got paid a lot on this position. And you know what it does? It creates a little bit of, oh, wow, this went up a lot quicker than I thought here. I was expecting a trend. And it makes you want to do something. You just gotta chill and go, okay, I don't need to do anything. I know it's better than having to buy something way down here, though. That's for sure. And so there should be some sort of conscious understanding that if you're in positions that are doing well and climbing, then you don't need to go, you know what? This was pretty good. Let me take this profit and go buy something that's dog shit and turn it into gold here. That's bad. This is bad trading, and it's going to happen a lot here. But that level of trading will help things stay stable, right? It will happen. It's going to happen. Retail will do it, and but we understand that we're not doing that. That's not what we're going to do. We're going to be in our trades for quite a lot of time, hanging out, having a good time, and again, we'll solve problems as they come. We know our spot. Look at the market. This is the S&P. Here's the COVID bottom over here. Is there anything here on a long term that would change our long term? I don't see it. So I don't see it. We're going to continue to push our position. Okay. It's going to be a while, and you need to allow yourself time for a while. Okay. You got to be looking a few months out from now and realize, okay, if this is going to trend for a few months, then what if it trends for 12 years? You know what happened? Financial crisis. People had a hard time buying for a couple years, but then everyone goes, shit, man, we've been in a bull market for like the last few years out of the low. Let's just buy everything still, right? And then you know what happens? Every time there's any sort of anxiety or pullbacks, nobody really cares. Again, this was terrible. December 2018. Thank you, Donald Trump. That was terrible over here. So maybe that's an exception, but we don't really have that much more anymore. Tariff man really fucked with things. But if we remove tariff man, if we think about from financial crisis, from this low, right? And you think about the trading here, everyone started to not give a shit about any pullback, and you keep pushing through. You got to realize how we're in that state right now. No one's going to give a shit. Investors don't care. They're not going to care if there's pullbacks or anything. And it's important to realize that you're going to need to develop your trading to that style to do well here. Because again, you're not going to be given gifts like before where people get scared and start to sell things and you get a good price. And then you go make 100% in 2 days because people had anxiety. Like weekend trades, those are not going to happen the same way anymore, except for retail, right? So realize that that's changed. You're going to have to make your money over a longer period of time, which is healthier and safer, right? And definitely helps people with larger capital. If you have less capital, that sucks. Like it's not as fun, and you don't get really the chances to make as much money. But that's where we are. That's where we are, guys. Looks very good. I'm interested to see what we get for tomorrow. Tomorrow's Friday. Have some fun. Fun day Friday. Get some green. It definitely looks like we're going to get some more points here. The Dow will be really interesting to see because, again, I think numbers do matter on a psychological level here. For the Dow a little bit more, always has. It'll be interesting to see what we get for some sort of reaction here. Dow doesn't stay as green as the S&P or Nasdaq will, right? It doesn't really have that same factor because it is so much longer term. That's what I'm looking at is if we get like another green day tomorrow on the Dow, like another, maybe not a percent day, but something strong again. That sort of thing again is like I can go even longer now in terms of my sleep schedule. Don't even need to look at all. Like these things really do add up. So we'll see what that does. But anyway, I mean, at the end of the day, another great day on terms of what we're looking for, and it's really about the confirmation and to realize the moment and to realize looking back what moments you could have taken advantage of, right? When you had the chances and you learn from that. And that's what I've talked about a lot, and realize that it's not going to be easy here still, right? There's going to be days that will suck, but understanding that that day that sucks is just a part of a broader trend here. That's a lot different than maybe a couple months ago. A day that sucked actually led to you having to exit everything to find another good day to get involved. We're not there right now, so push through everything. I'll see you guys in the morning. I'll be here in the morning. Again, nice lazy day today. You see the pre-market numbers. Screw it. What do I need to do here? Already fucking bought everything. So tomorrow, though, Friday, I'll be here. I'll see you guys in the morning. Enjoy your night, your evening, your afternoon. And until next time.